Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. My name is Andrew, the founder of CFO, and this is the week of November 6th through 10th for the technical analysis video of the CFO Swinger Watch newsletter. All right, with that, let's start off with the markets. So I'm going to be doing something slightly different here in this video. I'll be going over the broader range of markets and not just the S&P 500. But let's start off with the S&P 500. So last week was a phenomenal week because we have positioned ourselves to be long, just like we did in the first week of October, and we're able to capture the entire move up higher until we hit that 437 resistance. And we did the same exact thing when the markets bottomed out, pivoted on October 27th, and continued to have a really good rally to the upside, completely erasing all the losses that we saw since this entire downtrend occurred in the last 2 weeks of October. So again, my initial analysis from around July to early August that an official pivot will be happening somewhere around the transition of October to November actually occurred. And again, this is all from following the seasonality trend. And again, it was my error, my personal error, to think that the market may not follow the seasonality trends in the last quarter here. So let me try to see if the markets will bottom in middle of October. And obviously I was dead wrong as we lost that daily 200 SMA, and the market told me that, hey, let's flush out more weak buyers and let's continue to move down. And then once we reach an actual area of demand, like we saw between 409 to 415, as I've mentioned a couple of times now, we officially got that pivot exactly on time as we transitioned from October to November. And so we got that very good pivot and that large bounce that we saw the entirety of last week. Right? Now, let's talk about some levels and let's talk about kind of what we can expect for the rest of the week. So for SPY, we are definitely in need and dire need of a pullback. So we need to let off some steam here because this uptrend is about to become a bit unhealthy if we want to continue to move to the upside. Now, what I'm personally thinking is that we can actually see a retest of 437, that previous hard level of resistance that we tried to get over in mid-October, but ultimately we failed, as obvious as that can be. And we can actually see a rejection first at 437. So obviously we have to retest it and then reject it. And then we'll get that very needed pullback that we need in order to make sure that this uptrend is healthy. And the reason why I want a healthy uptrend is that, well, we have two gap ups, all right? And it's all within the same exact week. And for the fact that we have recovered 100% of the losses that we attained since middle of October, this type of gap ups that haven't been filled is a little bit of a cautionary sign, a warning sign that the market needs to kind of calm down here, let off some steam, take a little break, and pull back and then consolidate or move sideways. So that's exactly what I'm going to be expecting for this week, and maybe even spilling over to the last week of November as well, even if I'm expecting a broader run up to the upside for the overall markets by the end of November. So basically, ideally for me now, is that we reject at 437. So we move up slightly again, maybe around tomorrow, reject at 437, come back down, fill in the gap that we weren't able to fill last Friday between Thursday and last Friday's price action, fill it in, come down slightly more, and have a retest at this 429.50 level and bounce. Okay, and as we're bouncing, I want us to basically follow this pattern. Okay, so let me just draw it out here. All right. So once we bounce at 429.50, I want us to consolidate and move sideways, right? Consolidation, move sideways, the same thing. So the reason why I want this to happen is that the 10 and the 21 SMAs have to catch up to the price. Okay, and in order for that to happen, the price either needs to pull back rapidly or it needs to move sideways for some time, and that could be this entire week. Now, obviously, the ideal situation for us is the market to move sideways rather than pulling back quickly, because that can entice more sellers to come back, especially the sellers who are trying to make sure that this gap is never filled. All right, because last time, before we started this entire downtrend, we attempted to fill in this gap and we didn't, right? We've filled in around 75%, right? But we didn't get that 100% gap fill of this gap down on this specific day in mid-October. So for us to really have an overall healthy uptrend, okay, we need to make sure we at least fill in this most recent gap, and try to make sure that we don't reintroduce sellers back into this uptrend, right? So again, with the markets, I'm expecting to see at least a range forming between 429.50 to 437. So from the closing price of last Friday, okay, if you go down to 429.50, that's over 1%. Right, and so far, usually when we do tend to see some good pullbacks or an actual good pullback, we tend to see a percentage move somewhere around 1% to 2%. So if you're looking at a 2% pullback, right, we should be somewhere around the next support level at 426. So I'm going to make sure that we keep that in mind, this 426 level in mind, because if we do see 429.50 not being held as a level of new support, since it was an old level of resistance, this level goes all the way back to early June when we made that small momentum micro bull flag, then we need to look at the next major level of new support, which is sitting at 426, and that will be a great pivot as well, because that will be a 2% pullback from this big run up, and plus we would have filled in this gap, and we would have started to fill in this gap on this specific first gap that we saw last week. All right, so those are your levels that you need to be looking out for, and potentially for a bigger picture, if we decide to consolidate between 429.50 and 437, we should be forming some sort of a small bull flag, and then we can start moving higher, and again, retest this macro descending trend line that we've started since we have hit the highs of this year at 459.44, which I think I've been saying many times, I believe, to make sure you guys know that the high of this year is at 459.44. Right? Now, again, bigger picture wise, as I've been saying, I'm going to expect the markets to be ending this year around 450 to 455, a nice 5-point range, and I'm going to be quote unquote editing that range as we get closer to that specific range. All right, so again, end of the rally is still in mind, still intact. Last week's price action was clearly indicative of that, so there you have it. Now QQQ, same story except just different levels, right? Now the only thing with the NASDAQ here is that the 21 SMA and the 10 SMAs aren't that too far off from the overall market, the overall price action here. So the fact that NASDAQ has also been leading this ramp up higher, and obviously individual strength for individual tech and growth names, I believe NASDAQ can hold up a lot better compared to the S&P 500. So if this doesn't want to fill in the gap, especially from last Wednesday to Thursday, which was the first gap up that we saw in the S&P 500 as well, then that's probably just normal for NASDAQ. But again, this is also needing a very good healthy pullback. So I'm going to be expecting at the very least the gap between Thursday and Friday to be filled, and somewhere around 362 is where we'll be seeing a potential support forming, because again, in order for us to fill in the gap between Thursday and Friday, we need to break this 364.50 support, which also happened to be the low of the day of last Friday. So yes, we need to pull back. All right. And again, the same thesis that I've had, it's the same analysis that I've had for the S&P 500 will be applied to NASDAQ once we see that nice pullback and bounce. Okay. And again, all this is just for my daily 10 and the 21 SMAs to catch up. Obviously, if you guys know how the SMAs or even EMAs work, the shorter dated SMA here will be catching up first, which means the 10 SMA will be rapidly shooting higher in order to catch up to the price. But again, we need a pullback so that we can help the 10 SMA catch up a lot quicker, and at the very same time, we can reset, quote unquote, reset this uptrend to be a lot more healthier as we pivot, bounce, and then consolidate. All right, lastly, IWM. Now, this is a different story. All right, so IWM has been taken into the back of the woods since, well, the market's formed the top. And instead, it decided to retest October's lows, right? And even all the way back to June's lows of last year, right? For October and June. And it completely erased all the gains that it has made since this year started. And so, I've informed my members, and obviously for you guys who are just, listening now, on Sunday night, is that IWM has come right back to this 165 to 170.50 demand area, and we've been holding this since last year. So it would be funny to see that it break this area and then continue to move to the downside, but obviously that didn't happen. So we got that initial break, but as the markets decided to bottom out around October 27th, we got that immediate smack up to the upside, and IWM had an even better, potentially more of an overreaction to the upside because of the fact that IWM has been absolutely horribly smacked to the downside from short sellers. So the small caps are obviously in a worst, it is in the worst shape actually. I was about to say worse, but it is in the worst shape out of the mid caps. Just the overall S&P 500, and even just comparing to NASDAQ as well. So I do have a theory that I told you guys as well last week in the Discord chat room that IWM might just be running to the upside a lot better compared to the overall markets for the end of the year rally, because again, this name has a lot more room to run compared to the S&P 500, just based on the scale of this downtrend that we've been seeing since the middle of summer and the last 2 months of quarter 3. So, it's pretty interesting to see that, it will be pretty interesting to see whether or not that theory becomes true, as IWM potentially can run up back to this 198.50 or overall 199 to 200 resistance area, okay, or supply area. Right, and again, I've been mentioning that this area between 200 to 198.50 for this entire year on IWM. So make sure you guys have that on your charts and have it, at least indicated on your charts. All right, so that is it for the overall markets. I also want to take a look at the bond yields. So bond yields finally took a nosedive, right? And I'm glad that it did, because we saw, and again, I've showed you guys in the Discord as well, some really, really large buying coming into the overall bonds, right? TLT specifically, since September, late September, and it's still been going on throughout the month of October. And so that's what really caught my eye, and I'm glad that we're seeing that follow through as the bonds completely topple from the top here, near, or actually at 5% for the 10-year Treasury note, the TNX here. And we also saw, the dollar coming back down too. And I'm glad we actually got that long-term, UUP position too to go along with the dollar here, right at, I believe it was on Halloween actually is when we got that position. And actually, I'm decided to add on Friday too. So not Friday, excuse me, on Wednesday. So from Tuesday and Wednesday, and so. I'm glad that I actually was able to see that this potential bull flag was not indeed a bull flag, and instead we actually broke down to the downside, and we broke the 50 SMA on the US dollar index, or DXY, and we closed below it. So that's very, very indicative of a new potential downtrend, and the fact that obviously this is a very bearish candlestick. Now, the only thing is, when we decide to break below a major SMA, we tend to snap right back to it. I've mentioned this multiple times, so you guys should remember that. And so, it depends on, well, it doesn't depend on whether it's an SMA or EMA. When the price breaks below whatever moving average that you're looking at, it will snap right back to it to retest it, or quote unquote back test it. So that's what I'm expecting on the dollar, which means that if the dollar decides to get a bounce to retest or back test the daily 50 SMA here, we can see the equity markets pulling back, which is exactly what we want. Okay, so everything's kind of lining up here. So the bond yields, the dollar, right, the greenback here, we want to be able to see some weak dollar movement, and the yields continuously going back down after its amazing run up so far this entire year, right? And obviously that will give some relief to a lot of the short-term and long-term bondholders like IEI and TLT. All right, so with that, let's go over our names for this week. So first of all, we have Apple. So Apple, we already have a position in it from last Friday, and so far it's been really, really good because on Friday we've had the earnings reaction, as Thursdays after hours was the official report, and on Friday we're able to at least bounce and not make new lows on that day after making a slight gap down from Thursday's closing price. Now, obviously, if you go on the 2-hour time frame, we haven't completely filled in that gap down, but this is pretty promising as we made higher highs and higher lows for the entirety of last Friday. So this is what I want to see on the 2-hour time frame. So I'm going to be checking on this pretty closely here on our current swing. So once we're able to hold over the 200 SMA on the 2-hour time frame, or at the very least be able to retest 177.50, I want us to see Apple breaking over this descending resistance trend line that you guys just saw on the daily time frame, break over 178, which is the official long confirmation entry point, and then continue to move up to 180. Now, this may completely contradict my overall market insight for this week, but I have seen Apple acting on its own regardless of what the market is doing. So even if the market is pulling back even just 1% on one single day, Apple can still decide to do its own thing and have maybe a green, a pretty positive, tight-ranged day. And that's still fine as long as we're continuously moving to the upside. And when we break over this descending resistance level, or this trend line, and heading up to 180, the next resistance level, and also our first target, it really shouldn't matter what the market is doing as long as Apple is continuously moving to the upside, making higher highs and higher lows, a textbook uptrend, right? So with Apple here on the daily time frame now, again, we've been making this flag. I've noted this a month ago and a couple of weeks ago as well. So, with the overall markets also kind of flagging out or making that broader cup and handle chart pattern that I talked about weeks ago, over and over again as well. So hopefully you guys remember that on the weekly time frame, especially for the S&P 500. With Apple making a flag here, really, it just makes sense. It just makes logical sense that, and from a technical perspective, that Apple is consolidating just like how the S&P 500 is doing as well. Okay, so as long as Apple continues to make an uptrend, right, or if you guys haven't gotten an entry yet, 178.10 is your best bet for an entry point over this horizontal level of resistance at 177.50 and over this descending resistance trend line. All right. Now our second name here is Unity Software. So this one is pretty enticing because number one, out of all the growth names that are just not doing too well, like this ticker here, Unity was able to come back down and retest a very major level of support and a very huge area of demand, which is sitting at 24.50. All right, and also, unfortunately, this is also the area of the previous all-time lows. All right, so all-time lows here was on this specific candlestick at 21.22. So, the fact that it's been able to come all the way back down from highs back in, the middle of summer here, and also the last 2 months of quarter three, it has absolutely been decimated, right? And the fact that it's come back down to retest the near lows, all-time lows, and also this major support level at 24.50, and then pivoting off of it, and also thanks to the market as well, helping this pivot here. I think this one's very intriguing and interesting for this week because we're also heading into earnings. Okay, so this one has earnings on Thursday, which means there is a slight possibility that we can see an earnings run up, which means an individual relative strength on this specific name this entire week, whether or not the market decides to pull back. So Unity here, again, nice reversal from this pivot at 24.50, which tells us that, hey, this name it's wanting to make higher highs and higher lows as we're heading into earnings, which can also help as an earnings catalyst as the price runs up into earnings. And I feel like I've been saying that for a long time because I have been saying that a long time because it does happen frequently. Okay, so with that price running into earnings comes along relative strength, which is exactly what we want to see on this name. And so based on that daily time frame analysis, if you go on a 2-hour time frame, okay, there are 2 entries here. So number one, we have our official entry point over 28.20, which is, well, over the previous high today. So the previous high today, which was last Friday's candlestick at 28.13, if we decide to break over the previous high, we should see an entry point around 28.20, and that will be a long term entry for a confirmation as well. So again, 28.20, okay, that will be your official entry point. Now, if this name decides to pull back, which I think it will on Monday or Tuesday, whether or not the market decides to pull back on Monday or Tuesday, I wouldn't know that. We should be seeing Unity coming back down and retesting a previous level of intraday resistance and previous support as well. So, and that level here is at 27. And that's the reason why I gave you guys the second entry, a long bounce at 27.10. All right, and that will give us that official confirmation to see a bounce at 27 and get that long entry at 27.10 as the price passes that specific number. Okay, now there's also gaps here that need to be filled, but again, as long as this name is continuously reversing to the upside, because this one, just like IWM, all right, has seen really bad price action for months on end. So it needs a relief rally. So at some point, I'm going to be expecting this name, even if there were no earnings this week, to just continuously run up, right? And that's what you want to see during a relief rally, right? That's the reason why we call it a relief rally. Okay, so again, these relief rallies are everywhere, like we saw on even just Friday's price action alone, the overall markets, as these really beaten up names have just absolutely been decimated, and they were finally following through on Friday. So, it was really hard to choose, personally for me, as I'm making this newsletter, to choose which one is officially looking a lot better and also has a lot more room to run. So Unity was that name that I was looking for, with that earnings run-up catalyst, that potential to do that, plus that potential relative strength compared to the overall markets if we do see a large, or rather a textbook pullback of 1% or 2%. All right, so our last name here is Airbnb. That's right. So Airbnb was completely, surprisingly, they sold it off on earnings when it rather had a very good earnings. It showed that they're kind of financially responsible. They've had a pretty large, cash in hand too, free cash flow too, and also overall just really, they beat on earnings and beat on revenue, right? It wasn't spectacular, but it was pretty good, depending on the quote unquote really bad economic conditions that we're currently in. I'm putting that in air quotes. Okay, so, and you guys should know why if you guys have read the newsletter for the past, the past few weeks, right? So, again, for Airbnb, the Friday's move was really, really good too. Based on, how its counterpart Expedia reported and reacted. So thanks to EXPE or Expedia Group, Airbnb was able to finally have the quote-unquote correct reaction to its earnings report. And so this got me intrigued because whenever I see these quick dips on the earnings reaction and then a sudden, another quick and pretty volatile bounce the upside, this tells me that this name is ready to have a very, very quick pivot and potentially a V-shaped recovery, right? I've seen this happen multiple times, especially after a scenario like this after earnings. So I want to make sure that we're a part of this potential run. And again, on the daily time frame, I've mentioned this a couple months ago, but as a refresher, Airbnb has been making this large macro ascending channel. Now, obviously, this is not good, right? An ascending channel is never good, right? It's an inherently bearish chart pattern. So, for Airbnb, it's not looking too good on the weekly time frame as well, or even just on the monthly. But the fact that we've come back down to this lower range on this ascending support trend line that makes up this ascending channel chart pattern gives us a very good long-term opportunity. Now, I don't know exactly how long because, well, frankly speaking, if we have come back down to this lower range here of this chart pattern, then there is also a likely chance that we can at least get near the upper range, the top range of this broader chart pattern on this ascending resistance trend line. And how do I know this? Well, it happened already multiple times. Well, in fact, 2 times, right? 1 time here, and obviously we didn't get so close to this ascending support trend line, but we have hit a major level of support around 105 or 104.50, and then we just slid on up higher to retest this top range or this ascending resistance trend line. So ideally, it would be nice for us to hold this pivot at this official ascending support trend line or this bottom range and head up towards that top range at this ascending resistance trend line. Okay, so that is the bigger picture here for Airbnb. But now, if we go back on the daily time frame and with that bigger picture in mind, okay, on the daily time frame, we have a lot of work to do, right? And so that's the reason why I want us to have a very swift and quick V-shaped recovery back to the upside, because the price is unfortunately below the daily 200 and the 50. It's a double whammy here. So in order for us to see an official uptrend, we need to get back over the daily 200 SMA, which is the reason why I gave you guys this long-term entry over 125.20, because the daily 200 SMA closed on Friday at 124.91, $124.91. That's right, it's almost at 125. And if the price decides to move up higher, I'm going to be expecting the daily 200 SMA to slightly curl up higher and hit 125, and then from that point forward, it's going to act as a level of or an area of resistance. And once the price is able to get back over the daily 200 SMA or 125, we should be getting a nice long-term entry point and a nice, really vault to run up as the price gets an influx of buyers over 125.20. And that is the reason why I gave you guys this secondary entry point. Now, if you guys want to be a bit more picture perfect here with your entry, okay, 123.55 is your best bet. Why? Because last Friday's highs was 123.45. And you guys can guess why 123.55 makes sense, because that is very close to that whole number level of 123.50. So if you're able to, again, break over the previous day's highs, well, you got yourself a nice early entry point, right? And again, you can still make profits just from 123 to 125, right? That's roughly around a 2 point move. Okay, I mean, you don't if you complain about that move, then I don't know what to tell you. All right, so you can literally play if the market decides to open up Airbnb around Friday's close, and we get that nice push upward, and we get that entry point at 123.55. You guys can get a nice scalp to the retest of the daily 200 SMA. And again, from judging from Friday's action, it looks like we really want to retest and backtest this daily 200 SMA. Okay, so for all the day traders out there, you guys can definitely use this opportunity to get a very quick and pretty easy trade, as the price is literally attracted like a magnet to the daily 200 SMA. All right. So that is your first, I guess, profit target. But overall, I'm going to be expecting 130 to be our first official target when we get an official entry point, a long entry point at 125.20. So that should give us at least that textbook 1 to 5 risk to reward ratio for our trade. Okay, and that's assuming you guys have or use $1 stop losses from your entry point, like I always do, right? I always tell you guys to do. All right, so that is it for this video. I know this is a long one, but again, if you guys really enjoyed my kind of, it was rather quick, but I really want to do this for the first time. But if you guys really enjoyed my overall market breakdown, I will do that. Well, I'll make sure to do that in the future videos, but make sure you guys let me know by liking this video and also commenting down below if you guys enjoyed this longer version of the overall market analysis. All right, and again, just to remind you guys, I only do the S&P 500, but if you guys want me to expand like I did in this video, let me know down in the comments and I will read them. All right, have a great rest of your night and see you guys tomorrow morning. Thank you guys so much for watching.